Good day, traders. I trust you are all well and that you're having absolutely fantastic time with your trading. Now, welcome to AVZ, and we are moving forward. Absolutely, I'm excited that we are now on broadcast number 20. And thank you for keeping up with absolutely everything. Now, when strategy number one is not set up, and the market is not trending upwards or downwards, then you have absolutely nothing to do. Do not go hunting and searching for strategy number two because you will lose money. So here is cable, pound versus USD. Strategy number one, we know this whole area here is a sell zone. And when we say zone, of course, even a little bit above the high of yesterday, that's all a sell zone, unless we have dramatic acceleration upwards into the heaven. So this is cable. Its specific exchange opened here. There was nothing dramatic about this candle at all. Same sizes, everything was just taking place. So nothing for you to do. You can't jump in there and say, "Oh, I've got a bull trend candle. I want to get into strategy number one." It is not strategy number one. That was no strategy number one. That was no strategy number one. No significant breakout took place here. We don't have any large candles away from the exchange opening. We don't have a large surprise bull breakout trend candle at all. There was no news that could have dramatically pushed the market up. So absolutely nothing for us to have done there. And then after the open, the market went sideways. Guys, is the market trending up or trending down at this stage? It is just going sideways. We don't have any dramatic breakout trend candle. Nothing happened at the open. No strategy number one, and the market is also not going up. So don't go looking for strategy number two anywhere in here. So nothing for us to do with cable, pound versus the dollar. I've been watching it, but nothing for us to do there. Let's have a look at yen. There is the yen. Now, if you trade in the yen, somewhere within here would have been Tokyo Open, around there. But you can see nothing dramatic happened with Tokyo Open. This breakout trend candle here is at the Hang Seng Hong Kong Open. There is nothing for us to do with this breakout trend candle. Had this breakout trend candle occurred here beneath the low of yesterday, it would have overridden the buy zone that is in the lower asset valuation zone. But guys, when you see a breakout trend candle like that and you are going headlong into a key level, the low of yesterday, you do nothing. You don't have 1 times risk reward. 1 times risk reward would be down here. So you cannot sell there and hope and wish and do whatever else you do, thinking that the market is going to sell off. We do not take low probability trades. If it does, fantastic, but we do not take low probability trades. So then you wait. Now look at this. This is the breakout beneath the low of yesterday. Just like we had at cable. Is there anything in here that says to you, oh my gosh, the bears are super strong. They have converted the buy zone into a sell zone. So let's look to trade. Nothing. We're away from the Tokyo Open. So there's no specific country exchange driving it. There was no news announcement that I could see that could have given us a surprise bear breakout. And we just don't have a breakout trend candle in any case. So we cannot say we have strategy number one. But this is what's interesting. Unlike what we had on cable, pound versus USD, the market begins to track downwards. Okay, remember, we said you can only look for strategy number two if you have strategy number one, driven by news or a surprise breakout trend candle, or at the open of the index. If you don't have strategy number one, you can then say, hey, the market is going down. So let me see if I can find a way to get into the market back at the test of the average price. So now the market is trending down. Unlike, let me pop it back up. Unlike cable, we're not going up anywhere. So there's no storage number one open or anything, but we're going sideways. So you cannot force in and say, hey, hang on, I'm going to trade that as storage number two, but you can't do that. You are in a trading range, you just begin to break out of it. But if you look at the yen, USD yen, slightly different proposition. No dramatic breakout beneath the low of yesterday, so we can't trade strategy number one. But what we see, the market is beginning to go down. Oh, I see a breakout trend candle there. Can I get a consecutive break, a follow-through candle? I don't get it. And the bulls had a chance to reverse this and come back into the buy zone, and they failed. We get another trend candle. We kind of go sideways. Now you can see the market is going down, and you got to try and find ways to get in. Oh, okay, let me correct that. You don't got to you don't got to do anything. If you see that, just ignore it, right? You don't have to force yourself into difficult trades. But in any case, if you're watching this and saying, I can see the market going down, I want to find ways to get into the market. I see that. That is fantastic. I want to get in beneath that candle, and you convince yourself that's the candle you want to get into. Okay. And then you want to sell beneath that candle. So let's say you do that. Market is now beginning to go down, and you do that. The most important thing is where your stop goes. Okay. Now, two things about currencies. First, we need to find a technical level. That is a little trading range, the pullback, test of the EMA. So a measured move above that is here. So your stop would need to go here. And that is perfectly fine because it is just above a key level, the low of yesterday. So you are taking that, and you are taking that on the premise, on the basis that, okay, the market is going to go down. I saw nothing dramatic, but that breakout trend candle, testing of the average price, I'm going to take it. I don't know how far it's going to go. It might just keep going all the way down. So maybe my trend actually is all of this, tails and weak bear breakout, etc. But the market is going down. So that could be my leg one. And it is ending here at the pullback leg two. So I'm going to take that and see if the bears can get down here. The other thing that I can see is this measured move, high of yesterday, low of yesterday. The measured move, got our midpoint there. That's when you plunked it in. So when you break out beneath or above, beneath the low of yesterday, above high of yesterday, the measured move is absolutely key as a profit target. So it's not a surprise that when you go to it here, the market started going up because people were taking profits and bulls were trying to make the bear breakout fail. Combination of profit taken by the bears selling and the bulls trying to make it fail. So you would have said, okay, I'm taking that, and let me see if I can get here. Now, we have to have a technical level. Then we need to check. That is fine. I recommend you always have minimum stop of at least 25 pips on currencies because of spread and all the beautiful things that go with it. So 29 pips is perfectly fine. Take the trade, remove half of it, and then just wait and see what happens. A key thing to bear in mind, if you're taking a trade when the market is going down and you don't have the dramatic breakout trend candles, expect to have sideways price action and tails and dodges. So don't be too quick to tighten your stop. You're going to wait to get a distinct lower high for you to put your stop on, or a strong breakout trend candle, or just wait until you get to the profit target. There we go to the profit target. Could you put your take profit above there? If you'd waited, there was another opportunity, and there's no point waiting when you get to those levels. That measured move. You may not have taken that, but then you see this high test candle, failed breakout above the 10 EMA, and I have said we don't want in a strong breakout, we don't want the test of the average price to break through the EMA, but it did break through here, close back within. So you might want to wait and take that. Now, would you take that? I know you're thinking about it. The problem with don't take that because of the breakout above the EMA. Bulls are strong enough to do that. And we're going sideways. There's no strength. Don't want to take the risk. Can you take that? Well, if you want to take that, the problem is a smack bang without one-to-one risk reward into the measured moves. So probably just let it go. And then we don't have anything else for us to trade here. Remember, only way is if we get a strong bull breakout and trade strategy number 2, or we get the bear breakout in number 2. So nothing else set up here. Now, I want to mention something. If you decide, because questions have come up, some traders said, I'm going to take that because I think it's strong enough. Where would you put your stop? Same thinking. So if you decide to take it, made the decision, is perfectly fine. There is a technical level. I'll put it above the high of yesterday. Do I have 25 pips? 22, I have to put it above the high of yesterday. So the stop will still be in the same place, aiming to get here. So if you decide to take that because you like that candle, that's a candle that we trade in the right context. So you like that and say, okay, I can see it's broken above that, but it's closed beneath. You're happy to take it, manage it. Lower probability trade in a market, best to let it go. But if you take it, you need to go to a technical level, 25% pip, 25 pips, and then manage your trade. All right, guys, I hope that is useful in a weak breakout and the market is going down. You can get into the market without any strong breakout. The market is going sideways. Do absolutely nothing. All right, guys, take care. Name is Dr. George. I will catch up with you again when we get into broadcast number 21. This is number 20. Take care and bye-bye.